Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours time. So if you'd like to watch it again, you can do so there, and we'd also love it if you subscribe to our channel and click on the bell to get notified of future releases. The webinar handouts can be downloaded from the handouts tab, also in the GoToWebinar control panel. If you're having any problems locating or downloading them, please just let me know, and in the questions tab, and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the different products we offer at FX Choice. If you're watching this on YouTube, these handouts will be available in the description box below the video. Please just click show more and you'll be able to see them. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader and was global head of technical analysis at Bloomberg. So Trevor, without further ado, over to you.
Okay, morning Dan, morning everybody. All right, so let me just start with looking at, sorry, hesitating there. Let me start by looking at the relative rotation graph here of the currencies. So you can see here that most of the G10 currencies are over on the right-hand side. It's the usual candidates, actually. Norwegian crown furthest on the right. That means most outperforming the US dollar, New Zealand dollar, Australian dollar, Swedish krona, euro, pound right on the line here. Then close to the vertical 100% level, the Japanese yen, the Swiss franc, and the Canadian dollar. Now, so they're moving with the US dollar. The highest is the Australian dollar. That means with the most positive momentum. But the direction here is all kind of southerly. So that means they're losing upside momentum. So it's a bit of a story that these currencies are slightly outperforming the dollar, but losing their power in that outperformance. So let's have a look at it on the chart here. The first thing is that we had already noticed the resistance here at 119.10, and that was where we got to last week, and then turned down from there back into testing support levels now as the dollar strengthens, and the support intensifies from 117.50 down to this important, very important low here in at 116.62. Let me just show you now, going to the weekly chart, why that is so important here. I had talked about this head and shoulders, left shoulder, head, right shoulder, breakdown, didn't false break, but now we're turning down back through it again now. So maybe we will be talking about head and shoulders again here now. So very important this level holds, because look, there's no support below this 116.62 level down to 114, so 2 whole euros of vulnerability if we break that level, but it's still a whole euro away. So, but watch out, we're in a very important level that it must hold, and it is looking rather weak at this moment. Same with the pound, actually. Pounds weakened quite a lot as well. So let's look at, here is the weekly chart. Let's look at the weekly chart first, actually. So here's the weekly. I've drawn this downtrend line in here, 1, 2, 3 points on it. Break up through that would be constructive. I would say we'd have to break this high of 138.88, 138.90. To confirm that that downtrend line is broken. We've got support. We had this support level which was broken at 136.90, but we've now got really the notable support of 135.70. 133 is a sort of very, very important level. The indicators, are looking a little bit sort of mixed in here, slightly weak here. The MACD is a pretty neutral message here, reflecting flatness in the market. We see this in the ADX, which is down at 14, so it's telling us we're not in a strong trend. The RSI is at 52, that's very neutral. The MACD is still slightly bullish, but that's a lagging picture. But watch out, we've got short-term resistance at 138.91, very important resistance at 139.81, and then two levels of support, 136 and 135.70 here that must hold. But otherwise, I think it's weakened inside its range. That's the best way of putting it.
Trevor, can I just interrupt you for a second, please?
Yes, of course.
Can I just announce, some people are writing to us saying that they actually can't hear. If you can hear, can you please write us a message or send us a little question in the questions tab so I can see that people can hear, because if we have a problem with, we might have a blanket problem with the audio. Okay, Trevor, sorry, I think you can continue for now, but I just hope that someone can.
Is anybody answering that they can hear?
Hang on one second. Yes, can't hear. No sound today. Oh my word. Can anybody hear this attendant? Please write me a message in the questions tab. I'm afraid not. Okay, Trevor, I think I did that, but this is just a test sound. No, see, people can't hear Trevor, I'm afraid. I think we're gonna have to, well, let's continue for now, and then we'll see if somebody.
Let's continue and make the recording.
Yeah, yes, quite right. Yeah. We can make a recording for YouTube. Yeah. Okay.
Okay. All right, maybe you should send that as a message if you can't.
Yeah, we'll do. Thank you.
That can go. Okay, but I'll carry on talking. Okay, so going the Australian dollar, remember where that is over here on our RG chart. Australian dollar outperforming the US dollar. So this is so we can see coming down here so weakening. The MACD is on the weekly is negative, as it's been negative all this time here. Head and shoulders here too, just like we were talking in the euro, but this one may be a bit more classic. High, higher high, lower high, neckline breakdown. We actually reached the objective of this big head and shoulders. I know I'm talking very long term here. Came down to 71, which was the measured objective from the head to the neckline, meeting big support here, and then now bounced to the neckline, which was significant support, now becomes significant resistance, and it has rebuffed us around the 75-cent level, and we're looking weak at that point. So here is us looking weak at the neckline retest level there. The RSI is at 51, so that's a neutral message. The MACD, which is a lagging message, is it's still bullish but narrowing, and the ADX has dropped down to 20. So this is really a flattening message here. So the trend is weakening. It looks like it's building up a consolidation rather than actually falling away or retesting. So I don't think that this is actually the beginning of another leg lower at the moment anyway. I think it's just going to consolidate below that line there. Let's look at the US dollar, Canadian dollar. Of course, that's the other way up. Okay, so here, this is the US dollar strengthening, Canadian dollar weakening. It's easing, towards this higher lows pattern here, resistance at really very significant resistance at 130, but our resistance a little bit below that 129. Looking at the daily chart, it's beginning to consolidate. Look at the ADX now at 21. It's telling us we're trading flat. We're kind of mean reverting, sell at the upper Bollinger Band, take a profit at the moving average. It's kind of profitable strategy when it's like this. And the MACD is slightly bullish, and the RSI is at 57 and rather neutral. So I think this has gone into neutral, is into coasting mode. Now the Norwegian crown, that was, remember, furthest over to the right, outperforming the US dollar. This is so this going down here is dollar weakness, so falling is Norwegian crown strength. But here too, I'm a bit worried that this has done its bit. If I go to the weekly chart here, you can see here we've come down, but this is a huge cigar, isn't it here? This is a monster cigar here. And so I think it will be finding significant dollar support here. Norwegian crown resistance is positioned on the right-hand side of the RRG chart. Of the strongest outperformer, I think, is in jeopardy now, and I think it's done its bit there, and so the best is over for that. And then just to follow up on what we have been following, because we had previously, the Australian dollar was furthest to the right and the Japanese yen was furthest to the left, so even better thing to sell than the dollar at the time that the dollar was weak. But here, this is the weekly chart of it here. So rising in this is the Australian dollar rising versus the yen. And I think too, this is coming into significant resistance now. And I think that has really already finished its move. So that dominance is over. It was a good run. It was really a terrific run that we caught there, but it's now run out of steam, I think, and you should already be out of that. We talked about that last week. So you know, it's turned a bit sort of iffy on the currencies, and some of them having reached significant levels that are likely to stop them in their track. It looks as though if I could say, it's likely to be a little bit flat in the currency market for a bit. Now moving to the cryptocurrency market, which rarely is flat. Now these were updated to Friday. There's been big changes over the weekend. So this is Friday's close, Thursdays, Wednesdays, Tuesdays, Mondays. So this is the direction. Big sell-off, as you know. Ethereum led the way. Bitcoin, Litecoin was a sort of reluctant at the time, but the chart has already changed this morning. And so on Bitcoin, we sold off hard here, and it's selling off again here now. And it's really quite threatening, I think, this chart here. We've got a little bit of a lower high and a higher low pattern, but if we're really close to breaking it. We had said beware of the 50,000 level, and the market really plummeted there. 51 resistance, and we said it was strong, and it really plummeted there. There is support at 33,000, you know, right down here, you know, and other support here at 40,000. But you know, it's looking extremely toppy to me. The RSI is pointing down, the MACD is pointing down. We've still got a 28, fairly good, strong trend reading. The trend is down. I think this looks really quite threatening picture. But look at the top here. We went into the top and then we turned down. So it sort of eased into the top, lost momentum, and then turned down. I want to contrast that with the other tops that were made. So which is going to be the most difficult to break? Let's go to Ethereum now. Well, Ethereum plummeted, crashed, bounced, and then has really eased and into now much even clearer symmetrical triangular shape here, the bottom of which is under threat. We've got support at very, 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 very important support at 3,000 here, which could come under threat and test. We're breaking down from this triangle. If this is a pennant, well, the implications of this are, you know, for a big move down to 2,300 area there, 2,500 area there, back to the 200-day moving average, for example, where it would find support. And it's a very threatening picture. Look at the behavior of the top here. If you can remember what the top was made like in Bitcoin that we just looked at, here we eased into the top, and we got a little bit of warning of lack of loss of momentum into the top here before the plummet last week in the market. So this is a different kind of top. This wasn't a V-shaped top. This was a loss of momentum type of top. So the V-shaped tops will be easier to break than if we come back to it. And then here on Litecoin, the top was a bit in between the two. So Bitcoin was a V-shaped top. Here we lost some momentum. Ethereum, we lost more momentum. So the easier top to break is, if we come back to test it, will be the Bitcoin one. But it doesn't look like that's happening. We've got another triangle here, and we're threatening the bottom of this triangle here. Very important levels to hold here that are even closer for the market. And so I think it's really very worrying. The 65 level really must hold here. If we were to break up, and this is true of the other ones too, there's very little resistance above. In this case, from 190 up to 230 area here. But really the threat is to the downside. And if we do break down, well, we do pick up support at 150, and then it intensifies below 140. But it is looking very threatening for another leg lower on these. Now, I wanted to show you this is what happened last week. Okay, the cryptos have changed now, but look at the dominant thing: underperformance of the currencies in here, and then the softening of the stock markets, and then gold and silver right down at the bottom here, and silver dropping nearly 4% last week. Gold not dropping so much, but it was a bad week. So it was a bad week for the precious metals. It was not a good week, unusually, for all of the indices. And then the dollar has strengthened against the currencies. So that is our background as we move in towards looking at the gold and the silver. So let's start with the gold, less bad than the silver. So here is gold flat. It's less bad because it didn't go down and it didn't go up. It's flat. The ADX has dropped now to 12, a very low reading. Anything below 20 is considered non-trending. Anything close to 10 is quite extreme, and that's recognizing this extremely flat behavior. As an investment, it's offering no capital gain at all. It's just going sideways, and that does look like it's wants to continue. Here we're ranging from this the top end here at 1830. Let's call it that, a little bit above 1830, and then support at 1750, and then the spike low at 1684. But I think it's a neutral message here. But in a way, neutral is kind of lucky, because silver here is looking quite horrible. Moving down, this is the weekly chart, rallied and then moved down again here. And so this gives us the sort of flag shape here, flag pole. Here's my parallel lines here. And we look as though we're close to testing this lower line. And so if today or early this week we do follow through on the downside here, then I've drawn in A, B, C, D, and this would indicate that we would be moving down to 2137, breaking the very significant level here at 23 and the spike low at 2250. So this is in great danger, I think, this market. It's probably a good idea to look at the gold silver. Remember, silver's weak, so that would put this up. This moving up is gold outperforming silver, but it's only outperforming it because it's going sideways while the silver is going down. So precious metals looking unattractive at the moment. Lots going on in the energy markets here. Let's look at the Brent Crude, which is the one we normally look at. It's testing a very important downtrend line here. I'll draw it in this line here. So this is a weekly chart here, and we're testing the line here and potentially breaking the line. So that is that line there. Let me draw it in. I will paint it red for the next time you see it, and it will have either failed or broken. This is look at it there now. So however you draw that line, we're right now breaking that downtrend line. This has got potentially very big implications, because I'm making this red because I like my resistance lines to be red. We did this consolidation. It was very hard to call whether we were going to break up or down. We have got resistance to clear at this high here at 73.69, this high here at 76.38, and this high here at 77.84. But why this is also important is if we go to the weekly chart, we are flirting with the 2019 highs here. So I'm bringing them in here. Here's 2019. And so we're really sort of fighting to break this congestion area properly. So it could flick up, then we'd be testing a 2018 high. And in this weekly chart, it is bullish. We've got the higher lows pattern. It's just been a struggle. It's been a 2-month struggle to try and make this break. The resistance is quite strong. The struggle is not surprising, but potentially I think the big action is going to be soon in the Brent crude oil. I favor that the move will be to the upside, but you know, a failure would be catastrophic for it. We've got a similar picture in natural gas. I know you don't trade natural gas, but natural gas is at its 2019 high as well. But the last time it failed at its 2019 high, it dropped 70%. And so in 2019 after that high. So it's at $5 now. It's back at the $5 level. And the last time it was at $5, it plummeted and fast 70%. So we're at an area where it can make the final break in natural gas and in Brent crude, or make its failure. So there's a lot to play for here, and this could be sort of what we'll be talking about in the final quarter of the year will be energy related. Right, now moving towards the stock indices. And
Trevor, can I interrupt you for a second?
Sure.
Yeah, we did. I know that we have had audio problems, but we have had to manage to get some questions in. We've had one from a chap called Ray Mills, who's actually left now, but he'll be watching later on YouTube. He said, would be interested to hear Trevor's views on the China A50 index, which appears to be breaking out of a downtrend. I'm not actually sure what a China A50 index is. I mean, perhaps you can.
Yes, well, it's China A shares, but you don't quote that, I don't think.
No, we don't. No, we don't. But I mean, we don't necessarily have to always talk about things that we do.
And he said what about it? He said it was breaking.
Yeah, 1 second. Let me go back. Yes, he says, which appears to be breaking out of a downtrend.
Well, I'm going to look at the much more widely followed index, which is the Shanghai Stock Exchange Composite. And that's the one that many people, put, have CFDs on. This is the daily chart. I don't see that at all, actually, here. So here we're flirting with the high, the February 21 high here, and it's looking very strong indeed. And here on the daily chart, we're powering ahead. The ADX has come up through 20. The RSI very strong indeed. MACD is very strong. I think it's, did he say breaking a downtrend or breaking an uptrend?
Downtrend.
Oh, downtrend. Yeah, I don't know where the down. Let's have a look. He may. Right. Okay. Sorry, just wasn't ready for the question. He may be talking about this, but I'm not sure how he would draw the downtrend. So from here to here, I see, probably like this. Okay, it isn't the same index, so got it. But that's already broken. That's the thing here. So this already did break 2 weeks ago, this one. So China's already broken up, in my opinion. That was around about here. That happened 3,600. But I think now I'm in the same, I'm in tune with him. And yes, I think it's a big break. I do think it's a big break. Okay, I'm with you now.
Hope that answers your question, Ray.
But I was thinking that's not breaking down, but it's already broken up. That's the thing. Okay. Well, I like that question. I wish we did trade that. It's a good market, but mostly the people who quote CFDs do it off the broad composite.
Mhm.
So correct me if I'm wrong about that.
Mhm.
Anything else? Any other questions? That's good.
No,
So
that was the one. Yes, that was just the
okay.
one. We also
You
had
want,
another question for you to cover Bitcoin, but you've already done that, so they'll pick it up on the video
okay,
later.
all right. Okay, let's go to the stock indices now, and we'll start as usual with the S&P. But we've got something else, something different to say about the S&P. It's not going up. In fact, it's had a really bad week, and it's under a lot of pressure. And so that we haven't had any weakness in this market that's lasted for any period of time for ages and ages and ages. As you can see from here, since the 2020 Christmas, the big sell-off in 2020. But here we're having this black candle. So let's get it all in perspective there. But the daily chart, definitely, we've had a weak week there. The MACD, weekly MACD has turned bearish. I put an exclamation mark there. We are supported at 4,370 and 4,200, but and it is undeniably long-term bullish. But I think we can give ourselves a bit of a pat on the back here, can't we, Dan? Because for the last 2 weeks, we've been warning that this market seasonally is coming into a weak period, and actually this is the week that it seasonally is weak, if there's too many mixes of WEEKs and WEAKs. But let me show you that graph again. This is a graph I showed you originally 2 weeks ago. It's updated now. So the black line here is the last 10 years of the S&P 500 averaged, okay, and then normalized starting at 100 at January the 1st. Now you can see this is seasonally a weak period in the market, particularly starting this week here. The grey line is taking away 2009, the global financial crisis, which skewed this and made it go deeper down that 1 year. So let's say we'll say that's not a normal year, just to say that it isn't caused just by that year. It's a general characteristic of the market that this period of time we are weak, and we are weak when we are meant to be weak. This goes on until the 3rd week of October, where extremely, spookily, and I don't know why this is, around the 3rd week of October, and this is a rather consistent thing, we make a low, and then the strongest period of the year is from then till the end of the year. This move up here is stronger even than the first 2 quarters, which are strong normally, but this quarter is the strongest quarter of the whole year normally, and it starts with a sort of sometimes a crash in October crash. Every crash we've had has been in October, including the one in 1929 and the one in 87. And then out of the crash, we bounce strongly, and this period is normally very strong. So you've got a very strange, very strong seasonal pattern in the US stock market, which is playing out so far. Anyway, if you consider this weakness to be the start of a potential top in the market here. So we'll see if it follows through. Now, what you will start to hear people saying is they will start talking about the bearish fundamentals that have been around for ages, but nobody ever mentions them because the price goes up. The fundamentals you hear are a function of the price. If the price is going up, you don't hear the fundamentals. So the things you'll be hearing, well, that it's seasonal, that this kind of thing happens. The Fed tapering, of course, as well, but the Fed we've known the Fed are tapering for several months, but all of a sudden it will become important. The debt ceiling as well, how's the debt going to be financed and so forth. Delta and the COVID variants will get very worried about them. Perhaps the rest of the world not vaccinating as much as we are, or maybe there'll be an uptick in the numbers, whatever we choose there. Inflation, the ugly inflation word, come back again. But again, 6 months ago, we were talking about it. Record fund flows out of the stock market. You know, people have been pulling their money out. I mentioned that to you as well. You know, people are beginning to think that this is really quite high. And then if you're familiar with this, one of the things that's powered the stock market has been the buyback programs by companies, which is basically a way that directors who are paid on performance of the stock price can manufacture a higher stock price by buying back their own shares, so using the company's money to buy back their own shares, so they themselves get multi-million-dollar bonuses. So it's a way of stealing money from the company by directors. Controversial, I know, but that is really what it is. But they're going to tax that in a different way, and that will make it less attractive to steal it in that way. They'll have to find new ways of stealing it. So if we're talking seasonal, and to continue the weather metaphor, it's cloudy with a chance of heavy rain. Okay, so there we are on the US stock market. Well, we've been very worried about the UK 100 for ages, haven't we? And we're worried because of that terrible amount of resistance we've got over the 4-year consolidation here. We moved up into it. We slowed up as we moved into it. As a weekly chart, it showed all the signs for many, many weeks that the FTSE, the UK 100 stocks are not the stocks to be in. For example, the German 30 is above that consolidation there, and obviously the US is way, way above it. But this is a really solid concrete ceiling for the FTSE. And so it continues to be my least favorite index, and this looks increasingly threatening, I would say as well, wouldn't you say? So we sold off here today. We're a bit steadier here, but now we're building up new levels of short-term resistance here. So watch for the 7,000 level. That's a big psychological number giving way. Then we'll be testing the 6,810 area here, break of that, very, very bearish. And I can see all those things being tested, and it's going to be very difficult for it to move forward. Moving to the German market, which is not that much better, but you know, the equivalent time period is back here, and that is now support for it, not resistance for it. But we're definitely losing momentum here, aren't we, on the weekly chart here? So we're being warned by the rise is getting slower. The MACD is negative. The daily chart, we had that slip last week down to 15,500. It steadied, found some support there from this area back here in June. But if it does break that during the week, then I'd look for a test of the 15,050 level there. And we do not want that to break, and otherwise the sell-off will accelerate. But there is one shining star here, and that is the Japanese market, the Japan index. Sorry, let's go back to my proper list here. So the Japanese index, and here it is. Now we are going up here, and we like that, it's going up. But let's get the context for this going up that's going on here. We were have been all year long very, very bullish of this, but then we had this sell-off in a flag formation, so we recognized the flag was in formation, and in the weekly chart it's very clear here. But 2 weeks ago we broke out of it, and we drew your attention to it. Last week we gapped higher, so we intensified the bullishness. Now we're challenging that high that we established in February, and that was at 30,714. But look, if this is a breakout of that, then, and it is a flag, we measured the flagpole, A, B, and this looks very like a flagpole. This looks very like a flag. It's a classic. It didn't go more than 50% down. So if we add A, B to C, then we are heading up to 34,744 here, on the basis of the strength of that move and the pullback in there. But I actually think there's more to happen here. I'm going to squeeze this up enormously, because if we clear that level, that higher February, look what we're into here. We're back into the 1990s here. Many of the people on this call will don't know about this, but we're pushing back to the price of 1990. What a fantastic run we've had on this thing that we've loved. And I think there's more to go on this. The next resistance after the February high is the 32,600 here, but that's not much further. Then we're looking, I can only whisper the all-time high there. And that was back in January 1990, and that was at 38,500. And we do look as though we want to go there, don't we? So this flag is part of the journey, I think. There, it's a consolidation after that big break. You know, we did see that 24,000, how important that was. Now we're pausing. I think the pause is likely, if it's a classic chart pattern, to be halfway through the move and then push up. So I'm still deeply in love with the Japan index. All right, Dan, do we have any questions?
No, that was it, Trevor, for today. Thank you very much.
All right,
okay, well, thank you everyone for attending. I'm sorry about the problem we had with the audio. Please join us again next week, same time, same place. And please don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came later, you can watch there. Also, just want to remind you that you must fill in the, or we ask you to fill in the survey that's about to pop up, and it'll help us improve the webinar. Okay, Trevor, anything else to add?
No, I'm sorry about not hearing, but I hope you will be able to join us for the YouTube version of it. And thank you very much. Thanks for the questions, even though you couldn't hear me. That's very appreciate that. Sorry, I was a bit slow picking up what you meant, but it was a good point that you made. Thank you for that. And thanks, Dan, for keeping your cool. Well, everybody, may the trend be with you.
And also with you. Bye-bye.
Thank you very much. Okay, Dan, thanks a lot.
Bye,
thanks, everybody.
Bye-bye.